and it's a 44-point downtick that the GIFT Nifty is suggesting right now. And Narendra Modi was sworn in for a third consecutive term as India's Prime Minister.
Support comes in at the 20-hourly average, which is 22,816.
Maybe two cuts between now and the end of the year. I don't know that we're going to get any cuts.
The starting is about 35 points higher, 23,333.
Even a better balance will be good for the PSU companies in the large PSU banks.
There are some critical issues which will await the actual allocation of ministries to these ministers.
We think that the neutral, in our view, is somewhere around 6%.
23,400 was crossed in the opening trade. So the market did make all-time highs. Sharp reversal of the trend of petering flows that we were highlighting over the last couple of months.
So lack of new launches, we have to manage with the existing models available with us.
Welcome at South Block with PMO employees clapping for him as he was entering his office.
We are in the green, so nothing to worry about that, but it has come off from the highs, from the opening highs for sure.
Sharpest strategies, top market trends, unmatched perspectives, the trading day's most comprehensive roundup. Stay ahead with NSE Closing Bell. Broadcasting live from the CNBC-TV18 Motilal Oswal studios in Mumbai.
Okay, that is the day so far. And as we enter the last hour of trade, markets have turned into the red and we're down 30 points. There was green when we were walking in, and now there is some profit booking which is setting in. This is, of course, the CNBC-TV18 Motilal Oswal studios. I'm Prashant, with me my colleagues Surabhi and Nigel. Guys, hi, good afternoon.
Hi, good afternoon. So for what it's worth, I mean, we had the green, but then there's been a second wave of selling. We had the all-time highs, but some volatility after that today.
Well, I know, and in the last few minutes, though the Nifty is down only 20, 30 points, or the mid-cap index is down 180 points now. And the breadth of the market that was firmly in favor of the number of stocks that were advancing, that's narrowed down a little bit. So I think par for the course after the kind of run that we have seen.
Oh, yeah.
But the broader markets, I think there is some more profit taking that's creeping in.
Yeah. No, small caps are doing quite okay. Market breadth, I'm just looking, is still 2:1. But mid caps, you're right. I mean, it's taken a bit of a dive from where things were. And generally, I mean, you look at a wide array of stocks. I mean, there's a bit of flattening out, a little bit of profit booking. That kind of action is essentially what you're seeing. That's the Nifty for you, and what we have from the day's high, 130 points off the day's highest level. So par for the course after the spectacular move. Just a few points. I mean, I'm not going to put out levels, and the levels in terms of the hourly averages, etc. hold support really for the Nifty comes in at about 22,850 or so. So there is a fair bit of distance between where we are and where the levels come in. But it's, I would say, still a decent day. Look at the advanced decline on your screen. Decent day after the spectacular rally last week. Small caps, I just sort of ran through the sector. Small caps are doing quite okay. Real estate and PSU banks in terms of specific pockets, groups of stocks looking up. IT stocks are seeing a pullback. I mean, actually, the IT services index is the top loser. But Friday to Friday last week, it had an 8% move. And I think the 2:1 advances to decline ratio is still holding. So, that's the kind of sort of trade that we are in. And we were talking about this in the morning, much needed also, right? I mean, after a big run sprint that we've had, some rest and some consolidation, digesting the gains we've had, absolutely necessary. Surabhi.
Absolutely. I think that some of that digestion has been happening today during the course of the day. So, I mean, if you look at some of these PSU stocks, that's where there's a bit of a cool-off. Some red, not much actually, just 1-2% down. That's all you're getting after a phenomenal move. So, Nalco, NBCC, NMDC, SAIL, GAIL, these are the stocks, the large PSU stocks trading on big volumes where there is a bit of a cool-off that's underway. By the way, IRB Infra has had an interesting reversal, down 6%. Remember, we spoke with the company today. They were sounding quite optimistic on their toll collection targets. Stocks down about 6%. On the upside, however, you have some PSUs which are managing to buck the trend. So look at REC, look at a HUDCO, look at a Bank of Baroda, or even a Power Grid. So it's very mixed in the PSU pack. I mean, overall, it's not a one-sided move on the PSU sort of basket today. Some other stocks which are managing to find traction despite this volatility at the index level. Look at Happiest Minds, 7.5% on the upside. Look at something like an RCF or a Rallis India. Some of these agri-related plays with the monsoon setting in. There's some green here. Fact, for instance, is up 13% as we speak. So interesting moves, pretty mixed. some red, some green for the mid caps, Nigel.
Well, and as you all took us through that entire market wrap, in the last few minutes, the markets are almost back in the green. That's how volatile it is, right? We were down and suddenly we have pulled back considerably. What's taken a bit of a knock in the last few minutes is Tata Consumer. It's moved to the low point of the day. So I think that one should come off you. It's a big dive that actually we're seeing on that counter. So keep an eye out on that one as well. Whoopsie daisy. Sharp dive is what we're seeing on that stock. But let's move on. And the next big event to watch under the new government is the union budget. We understand that the government has received various proposals for a relook or revamp of some of the key programs. Parikshit Luthra, well, he's joining us to fill us in with what he's picking up. Parikshit, please take it away.
Well, yes, today will be the first cabinet meeting of NDA 3.0 government. And one thing which will be the focus will be the 100 days agenda. On how to kickstart work on that, the message will be very clear that the government has got the mandate for a third time and they need to execute it for the welfare of the poor, for the women, for the youth and the farmers. So we're hearing from our sources that the government has received feedback about increasing allocation for the aspirational districts program. In fact, there is a proposal to increase the allocation for the aspirational district program in the budget, and this could be over 1,000 crores or 1,500 crores as well. Also to expand the program beyond the 500 districts in the country currently. At the same time, the Atal Innovation Mission, which the government considers to be a success, this includes setting up of Atal Tinkering Labs at educational institutions across the country. Now the government believes that in the third term, for the next 5 years, the focus of this mission has to be on entrepreneurship and job creation. So we could possibly see some discussion, some review within the government of the Atal Innovation Mission. Thirdly, on MSMEs. Increasing credit to MSMEs, exports of MSMEs has been an issue for the past many years. And the government is looking at a proposal for actually setting up an institute on the lines of NABARD, for example, to look at ways to increase the flow of credit, indemnify credit that is flowing from banks to MSMEs, and also increase exports from MSMEs to key countries across the world. In terms of furthering the MSME push, we believe that there is a very serious review of the PLI scheme, which will be undertaken in the days to come. And this would entail having backward linkages for MSMEs so that they are a part of the value chain. Also, there could be a review of PLI schemes with the effect of making sure that industries which create more job get the focus of incentives and the PLI schemes. And there is also a feedback that the government is constantly receiving, and that is about how to balance the need for strong welfare agenda. So officials are telling the government that the welfare schemes that we bring out in the budget or in the days to come, be it for the farmers, youth, poor, or the women for that matter, that must be balanced by divestment and asset monetization. We cannot rule out a scheme for women specifically. There are schemes being considered such as direct benefit transfers for women directly, because they feel that women can actually use the money for the entire family, and this would really help the poorest households in the country. So direct benefit for transfers for women is also something that is being discussed, but whether it sees the light of the day or not is something we'll have to wait and watch.
Okay, all right. Thanks a lot for that, Parikshit. We'll keep coming back to you to get you updates in terms of what are you picking up. By the way, the markets, there have been some select stocks that have come in for profit taking. NCC last week, it had a dream run. Today, in fact, it's seeing some bit of selling. So NCC comes up for you in the screen. PFC as well has now cut its gains. I recall earlier today it was up, I think, roughly around 6%. So PFC has slipped a little bit. And JSPL, Mr. Naveen Jindal, coming out trumps in the Lok Sabha elections and, getting back that seat. The stock has seen a big rally. It's not just that, even fundamentally, they're focusing on reducing cost, increasing their value-added products, and improving the margins as well. And also keep in mind, in the next couple of years, capacity for them will go from around 9.5 million tons to around 15.5 million tons. For the time being, some kind of profit taking. Mitesh Thakkar is back with us. Mitesh, good afternoon. Well, it's a fairly good day. After the kind of rally we have seen in the last few days, we're consolidating. We're down 20, 30 points odd. How would you trade the Nifty? We're holding at around 23,270.
So, Nigel, I think, today we got a reference point. On the upside, 23,350, which is and 2300, which is an important hourly closing. I think we have not been able to cross that decisively. So now that becomes the upside trigger point. Also, since the election day, we have kind of rallied about 1600 points. So maybe a pullback will happen. Now, the first support level for me is around 23,080, 23,090. And around those levels, or when we approach closer to those levels, I would want to go aggressively on the buying side. But for the time being, just holding my horses on the index. That's the way we'll approach the index. For individual stocks, I think Crompton is something which has come on the radar. It's a buy with a stop at 403 for targets of 420. I suspect even higher levels could be tested over there. And Grasim is a buy with a stop at 24 for targets of around 25.40.
Okay, all right. Thanks a lot for that, Mitesh. We'll come back to you for a couple of calls later on in the trading session. Well, life insurance stocks, they are trading at days high after posting their May business data. All life insurers except SBI Life have posted strong numbers. Yash, always on top of the insurance companies, he's joining in to fill us in with all of those data. So Yash, run us through the data and tell us who's really outperformed and underperformed.
Well, Nigel, pretty consistent growth as far as life insurance companies are concerned. May happens to be another very strong month for these life insurance companies. If I have to choose one outperformer out of all the listed companies this time around in the month of May, it'll have to be ICICI Prudential Life Insurance. As far as companies' May premium is concerned, that grew by 33%. Up to May, the premium is up 31%. The total annualized premium equivalent or total APE is up 38%, and the retail APE, which will aid the margins for the company, is up about 57%. HDFC Life, the retail APE performance has been very strong. Premium growth has been decent. May premium growing at 14%. Up to May premium is up 10%. Total APE growing at 17%. Retail annualized premium equivalent, that growing at a strong 23%. Max Life is concerned, again, a good all-round performance for the company. We've seen in the previous 3 months that the company has been delivering strong. This time around as well in the month of May, the premium grew at 23%. Up to May premium is up 30%. Total annualized premium growing at 25%. Retail annualized premium growing at 31%. SBI Life this time around, the premium growth has been weak, though the APE performance is pretty consistent. The premium saw contraction of 2% in the month of May. Up to May, the premium is up just about 8%. Look at the APE numbers. Total APE growing at 18%, retail APE at 25%. Finally, LIC, again, strong premium growth, but not very great in that sense when it comes to AP growth. Premium growing at 19%. Up to May, the premium growing at 46%. Remember, the previous month, that is April, was very strong for LIC. Hence, up to May premium looks very strong. Total AP in the month of May for LIC is grown at 5%. And retail AP for LIC in the month of May, that has grown at about 7%.
Okay, all right. Thanks a lot for joining in, Yash, and running us through all of the data points. Well, let's get some fundamental analysis going then. Dipan Mehta from Elixir Equities joins us on the show. Hi, Dipan. Welcome to the show and good afternoon. Yeah, I was waiting for you to come on the screen. Tell us, Dipan, what do you make of these life insurance companies and what's the pick from the pack?
Yeah, Nigel, good afternoon and thank you for having me on your show. I think that it's a great long-term business. And as I see the market, I think we need to get more and more defensive. From that point of view, we've already seen FMCG stocks do well, as IT and pharma. You could add insurance companies as well. These companies have a long runway for growth. I think valuations also have settled down. What like HDFC Life, which was going at 5 times EV, market cap to EV, is now around 3.5 to 4 times or thereabout. And what I'm noticing consistently year after year, the enterprise value, which is the key metrics on which we value these companies, is steadily growing in the high double-digit, I would say 15-17% type of growth rate, which is quite impressive. But the top pick, according to me, has to be LIC, considering that they are making money in the phenomenal amount of profits in such markets, and they are still trading below their enterprise value. And also, I think they're pretty much managing their growth rates, keeping their market share also intact. So I think that in case of LIC, you would see compounded growth rates, as well as definitely would bet on re-rating of the valuation multiples for LIC, but nonetheless, positive on all insurance companies.
Okay, positive on all insurance companies. Dipan, hi, good afternoon. I mean, the market itself, Dipan, what's your view from here out? Do you see, the frenetic pace of 1.5-2% daily moves cannot continue. That is for sure. But what from here, according to you? And where will money go, in your opinion?
See, Prashant, I think that definitely we have seen the leadership position change, and a lot more investors are looking at defensive industries or underperforming sectors like IT and FMCG. So that is keeping the actual indices up. But I would sense that there is some correction time-wise, at least in a lot of the side counters and the old-time favorites. I would say that from a market perspective, I still want to be light in the market. I still want to be cautious and be extremely selective when it comes to buying shares. And one should definitely expect a bit of a correction. It could be around the budget or whenever at some point of time, this market needs to correct by about 10% and stay over there for a longer period of time than what we just saw recently. Because this kind of a frenetic pace cannot really continue. And valuations are really elevated for a lot of companies. Even for ordinary businesses which would trade at X, now they're quoting at 2x P multiple or price to book. So I don't feel comfortable really going all time or putting big money to work in a market like this. I would patiently wait for a correction. It will happen, if not now, I think a few months from now.
Okay, all right. Deepan, I wanted your view on Bharti Airtel. It's entered the $100 billion in terms of market capitalization. We only have 4 here in India as of now, with plenty more to join the list. But as of now, it's only Reliance, TCS, HDFC Bank, and today you have Bharti Airtel as well that joined the list. Year to date, if we pull up the performance, you'll see the way it's outperformed because the Nifty is up, only around 7% odd. But Bharti Airtel is up close to 39%. What do you make of the stock? CLSA is still pretty much bullish on the stock. I think the target price they have out there is 1,540. Your take?
Nigel, yeah, I mean, it's been a great story. And a lot of the stock price up move, which we have seen is an anticipation of increase in tariff. Okay, and that's not yet happened in a material manner, but the stock price has moved up. So my sense is that I would wait for the actual ARPUs to move up significantly. They've been so far flat that 1, 2, 2, 3% type of a move. Let us see when they get to the 10% ARPU increase in a quarter or in a half year, then maybe you'll be able to assess the business better and make a more accurate call on what the earnings can be. If you ask me right now, because of the kind of outperformance and the move which we have seen, it's pretty much, I would say, a neutral rate or well priced at this point of time. And I would want to invest more in Bharti, but just a disclosure, we and our clients have already invested, but we want to buy more of Bharti at these levels. But I think that even selling also is to be avoided. So it's a hold in our opinion. And I would, as I said, that let the actual numbers and ARPU increases come before we can, go a bit more optimistic on the stock.
No, point taken. Devan, any thoughts on IIFL Finance? It's seeing a spectacular move. I mean, from 400 to almost $500 in 2-3 days. We sort of did this with Ritu, who told us that IIFL informed exchanges last week that audit, on the back of what the RBI said, is over. So, of course, now markets are awaiting some sort of some clarity. This is with regards to the gold finance business. Stock had fallen from almost 700 levels to 350. Any thoughts here?
No, Prashant, it's looking very interesting. And amongst the entire NBFC pack, it is the cheapest stock and very aggressive management. They have grown the book handsomely over the past 2-3 years, gained significant market share in all the products that they're operating in. And this particular RBI move was definitely a setback and maybe a buying opportunity as well, because eventually they will solve these problems, and 6 months, 1 year down the line, they will get back to their growth rates. And as they've been expanding their network also over the past 2-3 years, all of those benefits also will come through. And once they have the clear from the RBI, I certainly expect the valuation ratios also to move up. So again, it's a story where you can see the earnings decently grow over the next 2-3 years. And definitely there's a case for re-rating of the price to book or the price to earnings multiple. So from the entire NBFC banking space, this is one stock where you can expect the trading rally to continue. And even from a longer term perspective, it's a good buy.
Okay, Deepan, interesting comments. Thank you very much for joining us. Great conversation as always. Appreciate you being here on CNBC-TV18 today. We'll take a quick commercial break here. Our first of the program, we are back. Amit Jeswani from Stallion Asset will join us on the other side. Stay tuned. Okay, welcome back. The market is just treading water, nothing very much. 6-7 points lower, 23,281 on the index. Amit Jeswani is with us. He's founder and chief investment officer at Stallion Asset. Amit, good afternoon. Great to have you with us here on CNBC-TV18 as always. Thanks for joining in. And, you know, we're chatting after what has been a historic week, extraordinary in terms of the moves, volatility. And I think a week we will all remember, especially that Tuesday. So let me begin by asking you what you did over the last week. Did you go through it without doing anything? Did you do a lot? Well, just give us a sense.
Prashant, we were chilling in life. So largely we had no exposure towards B2G. My exposure towards B2G was 2.5%. That too had to cut it off on the on that exit on that main election day result. It's just that me and B2G are not friends at all. It's very tough to have conviction for us. We had one renewable company where we had 2% allocation and one other small 0.5% weight. So that was our entire allocation towards somewhat B2G, but we went to 0%. But that was the only change that we made to our portfolio. Typically in our portfolio, Prashant, we always have 20, 25 stocks in the wait list. So if we move, you know, if we think something may not do well, our risk management systems, alert us and we just move to something else. And that's what we did this time also. But our exposure towards B2G historically has been very, very, very low. So all these things don't impact us. In fact, according to us, if things would have got even worse, we would have outperformed even more. But we are happy that things have not gone worse. We have Modi ji as our prime minister. And for the next 5 years, we hope to make a lot of money. And these are times where, you know, whenever you get a dip, we have to dream big and execute very large things for the next. I believe a lot of people, a lot of investors will completely change their net worth and they will move to a next orbit of their lives. We will see massive number of millionaires from the equity market going forward. I'm super bullish.
Yeah. No, that's well put. And this bull market that we have already has done that for many people, right? More than I think any other past bull market in that sense. Amit, from your, not B2G, as you said, you're not friends, B2G and you, but anything else that you bought, or were you fully invested, or you don't have cash? Because it's not just B2G, but everything, you had that swoon everywhere for at least one day.
Yeah, that day we were in panic mode, so we didn't do so much. So we ourselves were in panic mode, but we have allocated 8% of our portfolio to real estate over the last 1-2 months. I would say that's a new sector that we have identified. What the two best companies? So if you see the real estate space, there is clear signs of consolidation happening. The market leader, the two best players. Like stocks are not recommendations. Whatever I speak about, these are just examples. Me, my family, my clients, everyone will have vested interest in virtually whatever we speak. We keep trading very aggressively. We buy, sell all the time. But stocks like Godrej, which have been growing at 37%, 5 years, Prestige, which has done 5-year CAGRs of 42%. These are now looking to be getting into that. We've just entered these two real estate companies, and these are about 8% of our portfolio. And they've done well already, like one of them is up 20%. So in 1 month. So those are the kind of changes that we have made. We have cut capital markets a little bit. We have 10% allocations to capital market right now, around 10-11% to capital markets. So in our beta portfolio, we have 10% capital markets, 8% real estate, and 2% financials broadly. So that is my beta part of my portfolio, which is a high beta, but I want to make it large there.
All right. Hi, Amit. Good afternoon and good to see you. When the last time you joined us as well, you were telling us about Godrej and Prestige. They were the two you liked from the real estate space. And you're sticking by them and you've cut some portfolio allocation to the capital markets. Got that. What about your top weighted stock? I think it was Polycab, right? And then followed by Zomato. Trimmed down positions on both those two?
Trimmed down, I don't know. Polycab remains about 9.5-10% of our portfolio, to by the best of my knowledge, because these stocks have gone a little volatile in last 3 days. So typically I know the exact weights, but it's around 9.5-10% of our portfolio. The gains have been phenomenal in Polycab. But if you think about it this quarter also, Nigel, Polycab grew at 29%, KEI grew at 18%, RR Kabel grew at 15%. And think about it, KEI total fixed asset is about 770 crores. Polycab, 770 crores is total fixed asset of KEI, which is the number 2 player in wires and cables. And RR Kabel is 550 crores. Polycab has guided for 1100 crores of capex for next 3 years. Every year for next 3 years. Basically, they want to create 1.5 times KEI every year for the next 3 years. So they are so optimistic. It is very tough for me to cut positions, because if I cut position, I have to buy something else. Like, because you're just moving in our world. In the fund, like in my industry, like for Stallion, we don't have cash position. We don't time the market so much. All we are thinking that if we are selling A, we are moving to B, and is B better than? So I'm not able to find a superior investment criteria stock right now. So we are sticking out in Polycab and Zomato as well. 74% growth. It is fundamentally very difficult for us to sell out Zomato, which is growing at 74%. Blinkit is now at 4,100 crores GMV, Nigel. If you do 4,100 crores into 4, that is $2 billion. It is equal to 16,000 crores. That is broadly $2 billion GMV. Amazon GMV is $18-19 billion in India. I think they will become very, very, very large. I don't want to say anything, but this fast commerce, this quick commerce space, it's booming. I don't know what these businesses will look like 1-2 years from today. So till the time they are growing at this pace, we cannot sell them because we don't have alternate. What are you going to buy? Your McDonald's is growing at 2%. Jubilant is growing at 3%. In quick service, in this food service space, you need market leaders, high growth, high ROC, and customers are loving the product. So those are the kind of bets we take. If you see the last 5 years of winners, Trend, Polycab, Persistent, these were growing when everyone else was struggling. And that is what we do. We divide India in 71 industries, and we find in each industry who's that player who's scaling and gaining market share.
Got it. All right, Amit. So we've got both those two. You like a couple of these counters. I wanted to ask you about the cement space as well. For the time being, just take a look at some of these stocks. Sagar Cement, let's move to the high point of the day. We are at CNBC-TV18. I told you if Mr. Naidu is going to return back to the fore, he's going to be pushing through that Amravati agenda, then some of these stocks will do well. Sagar Cement, Ramco Cements, NCL Industries, KCP we already covered in the last week or so. So I'll want, Amit's comment on this. For the time being, though, let's turn our attention to the consumer durable space. As summer season comes to an end, consumer durable makers have a reason to cheer. After 3 years of subdued demand, well, the industry has seen a record growth in cooling appliances. My colleague Shilpa Ranipeta joins us to fill us in with more details. Well, Shilpa, it's been a scorching hot summer. I have chilled out with something else, but you tell us about the appliances space. Go ahead.
Well, the scorching summer, definitely that has brought cheer to the consumer durable makers. For 3 years, they have not been seeing any significant growth, but this time between March to May, the industry has in fact grown about 25% overall over last year. And this is obviously led by the AC segment. Given the heat, the AC segment grew by almost 30%, and the Consumer Electronics and Manufacturers Association expects that at the end of the year, they will sell about 13.5 million pieces of air conditioners, and this is as against about 11 million units that was sold last year. The refrigerator segment also saw about 20% growth overall, and the mass segment also, which has been seeing a decline over the past 3 years, has bounced back, with the air coolers also doing really well. And the unprecedented demand in fact also led to supply shortages for a few of the players. Now this growth, remember, comes on the back of a decline. In fact, last year, the summer season, we saw 25 to 30% decline for cooling appliances for consumer durable players. Now, some of the brands have also actually done exceptionally well. If you look at Godrej Appliances, their AC sales grew 150%. Refrigerators grew about 40%. Vijay Sales, which is the retailer, says that ACs grew 60%. And in the mass segment, air coolers grew 60 to 70% over last year. Blue Star also, in fact, given the unprecedented demand, says that it expects room air conditioners to grow nearly 60% in the first quarter of FY25. Other brands like Symphony company also said that they saw very robust demand across segments and across territories. And all of this on back of the summer heat that we saw over the past couple of months. And while there is robust demand going on, there is on the other hand also raw material shortages and prices inching up that we're seeing. And given this, we're given to understand that we could expect price hikes in the next quarter. Some brands are given to understand might hike prices by 2 to 3% in the second quarter. This is on the back of rising copper prices, aluminium prices, ocean freight prices nearly doubling, and also container prices that are increasing. Back to you.
All right, Shilpa, thanks very much. You know, Nigel, I had a friend in Jaipur who moved from Bombay to Jaipur. He was looking for a 1-ton 5-star AC. And he was, I mean, I don't know if he's exaggerating. He said, I couldn't find it.
Oh.
Because the higher, and people have become very conscious of stars because of power savings, etc.
Yeah.
So higher end, 2-ton, whatever you could find, it was available. And chains he visited in Jaipur, they said, well, whatever we used to sell in a year, we sold in 3 months flat.
Wow.
So it's when the numbers come out and the unit volume numbers which Shilpa put out, I think bear that out. But I think the final results for the quarter when they come out, I think should be
interesting.
Pretty good. All the stocks are up. I was looking at Voltas, Blue Star. All these names are up between 25 and 30% in a quarter. So that's the three names there. Amit is still with us. Amit, any thoughts? Do you own anything here? And your views?
Yeah, we have three names here. We have Varun Beverages. We have a small company from Bihar called Aditya Vision. We have PG Electroplast, which we added lately last quarter only. So these are the three names that we have. We like PG Electroplast, who's a contract manufacturing company from Noida, but they're gaining market share very aggressively. When you compare it to Amber, their ROCs are 21%. They've guided for very high growth. They've been scaling up very well. For those are the and they've been reinvesting capital at very high ROCs. So our patterns are the same. You want leaders who's gaining market share, and they are the fastest when you compare in the AC industry. They are the fastest growing ones. PG Electroplast there, and we got it at reasonable prices. Then you have Varun Beverages, which is our favorite. They already said in the con call, which happened, that they are at 100% capacity utilization. So if that happens, ideally the growth should be extremely good for Varun Beverages. And the third one is Aditya Vision. Hopefully they do well.
Okay, all right. Since we're talking about the summer, Amit, I'm not sure about your preference, but what about some of those, the beers, beer makers, home distilleries, United Breweries? I'm not sure whether you have knocked in a few, but what about the views on the stocks? There's that other factor that's played out that Mr. Naidu has promised better, that the liquor that's being served in Andhra Pradesh will be of a premium quality or something on those lines, and that's why a lot of the Tilak Nagar and the likes are running along. Do you all have any exposure there?
No, we don't have any exposure. We don't have it now. We had Tilak Nagar. We sold Tilak Nagar. We've never been able to understand why it doesn't get valuations. Aurora Ji doesn't get valuations, but Som is a scaler there. United Spirits doesn't grow. They've changed managements, but the growth has been very lackluster. Radico Khaitan is the guy who keeps gaining market share. So if the valuations were cheap, I would buy Radico Khaitan. We had at one point of time Sula in our portfolio. Sula, for every 1 teaspoon of wine which is had in India, 100 liters of whiskey is had. So the opportunity size for Sula is extremely large. And 70% of wine drinkers are women. So if you want to bet on women drinking wine, Sula is and the revenues are just 500 crores today, and it is 50% of the market. So it's a kind of opportunity we look at, but the growth is very at 5, 10, 15% growth. Actually, we get such high good companies that these 5, 10% growth stocks, we are not able to, it doesn't fit only the portfolio. We are not able to sustain in the portfolio. That becomes the problem for us.
Quite a lot of passion while talking about some of these stocks, Amit. But for the time being, what I understood is...
I have the vision in my head is of a teaspoon, Amit having a wine in it, spoon.
So Tilak Nagar is out. So as of now, there's no much exposure in the portfolio to the alcohol stocks, as of now.
No, as of now, we have no exposure.
Just a consumer, not investing too much in them. Okay. All right. So those are a couple of fancy sectors. But I wanted your view, Amit, actually on the cement pack. And I'm just going to run our viewers through. A few of these companies are doing quite well in today's trading session. Whether you look at Ultratech Cement, well, that's up, one of the big gainers today. And the cement pack is buzzing on the whole. So I said, let's put out 4 big factors or why these cement stocks are doing well. Point number one, there is a lot of talk about this rural housing push. We have already seen that in FY25 budget, well, the allocation has been close to around 45,000 crores to rural housing. And the FM has already announced 2 crore, more rural houses under the scheme out there. And there's hope that maybe, in fact, that number can be up. So that could be one factor that's playing out there. Point number one. Point number two is there is some speculation of sorts, not from now, but actually for the last 1 year or so. There'll be some rationalization of the GST rate, which is currently at around 28%. We have no confirmation, but in the past, there have been some hints that maybe there could be some potential rationalization. How does this help? This will help on volumes, remember. Not on, in terms of they make a higher margin or anything on that sort. Operating leverage will play out because they'll be able to sell a higher amount of cement at a lower cost, which in all will help, that volume push. So that's the second factor. Point number three is, and what we have been talking about for the last 1 week or so from the time these elections were announced, the results were announced, that Mr. Chandrababu Naidu is set to become CM of Andhra Pradesh. And the way the street looks at it is that the TDP, well, they have been pro-development and they'll likely continue with that agenda. Also, the Amravati plan, well, when Mr. Naidu was at the helm, in the previous tenure, he spoke a lot about it. And suddenly all of that got shelved. So the hope is that comes back on the table. And that's where, in fact, some of these stocks can gain. The list comes up for you on the screen. These are a few of those companies. And the percentage of their exposure to Andhra Pradesh and Telangana, that's more important. So some of those smaller size companies, they are gaining a larger extent. Ramco Cement as well has close to 30% of their capacity out there. So some of those stocks have done quite well. And the final point is, now we're into the monsoon, but the hope is that maybe these prices have bottomed out. Cement prices have bottomed out. Q4 was very, very weak on pricing. So the hope is that the monsoon gets out of the way, demand hopefully comes back, and then the cement companies can go ahead and push through some price increases. Because of the, the general elections as well, some of those price increases was not getting absorbed. Now the hope is prices have bottomed up, volumes will pick up, and price increases will be pushed through. So that's the 4 big reasons why cement stocks are buzzing today. Amit, your view on some of these cement companies, do you all have some exposure out there?
No, Nigel, we've got no exposure towards cement companies. Actually, none of them are like super high growth. We typically want 14% is a minimum nominal GDP growth. We want companies which can grow at 1 time, 2 times faster than that. So we don't find in our frameworks companies who can grow at that pace, at least for now. But if there will be, we will love to look at this sector again. And then also you need highest ROCs of 20-25%. Your companies are reinvesting at 14% ROC, Ultratech, etc. Shree was the only guy who should do that 18-20% ROCs. But that is also now, that's not an easy trade. So we have other companies who are reinvesting capital at 20-25% ROCs. We want to be there.
All right.
Anything new you want to highlight? I mean, we spoke about NetWeb, DOMS. Amit, last time you were on. Any addition, anything else on the radar?
Prashant, we keep looking. Like last earnings season was not a great earnings season. There were new additions like DOMS, PG Electroplast we added, Dixon we added. But Dixon we added at 8,000 levels. Today is 10,000. So I don't want to speak too much about it. But that is becoming a monopoly in mobile phones. If you see, they have added this company called iSmartu, which will do around 8,000 crores of, which has done 8,000 crores of revenues in FY24. The PAT was 200 crores and they acquired it 51% stake at 200 crores. Basically at free prices. Dixon got iSmartu. Their Xiaomi scale-up will start. So 17,700 was the revenues for Dixon in FY24. I think they will do anywhere between 30 to 35,000 crores in FY25. This one is also reinvesting 100% of cash flows at 30-35% ROC. Monopoly in mobiles, LED, manufacturing, 35% market share in TVs. Basically the same game. And electronic, we are looking at this electronic manufacturing theme very aggressively. So this quarter we added Dixon but Dixon's up 25%. So I don't think it's a good idea for me to speak too much about it. PG we added. We keep looking at what we have in our portfolio and how do we get better. And yes, but there are opportunities. I feel Prashant, I honestly feel if someone's ready to work hard or can give the money to us, either ways, a massive opportunity there. Because there are a lot of entrepreneurs. You should avoid 5, 10, 15% growing companies now. Because if Modi ji is there, see the last 5 years, which were the largest winners. That will tell you a lot about the next 5 years. Look at how APL Apollo scaled, look at how Persistent scaled, look at how Polycap scaled. These were all very small companies. India Mart, so many companies have become the market leaders. And hopefully we can do the same, what we've done in the last 4 or 5 years for our customers.
All right. Well put. And I think viewers are listening. So, you'll start, the phone will start ringing. The checks will start coming. But good conversation, Amit. Appreciate you joining us. And thank you very much for joining us. By the way, on Dixon, the management was with us. And they did say that actually that the revenue guidance for FY25 is that 32,000 crores as opposed to the 17 plus around there, what they did in FY24. So that is Dixon for you. Stocks done well. We'll take a quick commercial break here. A D-Street chatter with Nimesh as always. What is Nimesh picking up in terms of specific stocks? And of course, we'll put out some short-term trading ideas as well. Stay tuned.
Welcome back. The mid-cap index has moved back into the green, which is good, and the Nifty is more or less flattish. Nimesh joins us to tell us what is he picking up in terms of D-Street chatter. Nimesh, take it away.
Hi Nigel, after the huge volatility last week, a bit of consolidation in today's market, and rightly so, towards the all-time highs. You're seeing some bit of profit booking as well in some select stocks. But from a flow perspective, the number may look large, but do account for that big emphasis block, which was $800 million. So it will get reflected on the numbers, both on the DI and FI side, because I understand large part of the book was bid by domestic mutual funds, so that number need to account for. In terms of sectors, there is a bit of momentum back in cement stocks, so those are well bid, and so are some select chemical names as well. On the other side, a bit of profit booking in IT stocks, but the overall feedback is the large part of the volatility as part of the election seems to be largely over now, so it's back to business, back to fundamentals. Of course, all eyes will be on the allocation of portfolios for ministers, so that's something might have a bit of a volatility to part with. But large part of the volatility is done with, so back to fundamentals. And from a flow perspective, some bit of buying has emerged in cement and chemical stocks today.
All right, Nimish, what about individual stocks? What are you picking up?
Well, actually, from an individual stock point of view, some bit of momentum seems to be back in the broader market. So the first stock from that list is Jain Irrigation. Big move on that stock, large volumes as well. In fact, for the last couple of days, I understand some bit of HNI interest is back. Some large HNIs have bought as well. And that leads to a bit of momentum in that particular name in today's market as well. So that's the first name. The second stock is Tata Communications. Within the telecom names, this is one stock which has relatively underperformed of late. But now some bit of buying seems to be back on that stock. So the volumes are on the higher side. Additionally, I guess this week there is an analyst meet, so all eyes will be on that, but that stock is buzzing in trade today. The third name is Emphasis. We spoke about the large block. As I said, the large part of the block was bid by domestic mutual funds, so nearly 70% is what I understand was bid by mutual funds. So the disclosures will be quite interesting, but again, at lower level, some bit of interest has come in that particular name. And the last one is Restaurant Brands Asia. It's been a stock which has been largely consolidating in a very narrow range, but now I understand some bit of interest is back. Overall, in general, the QSR space seems to be seeing some bit of action, and RBI stands out purely on back of buy flows today.
Okay, Nimesh, thank you very much for that. So those are individual stocks to watch out for as well. Now, as the NDA government takes charge for its third straight term, my colleague Anuj Singhal caught up with Morgan Stanley's Rhythm Desai to understand how the new coalition government's policies could affect the market from here on. Listen in.
Well, two things have not changed in last 10 years. Narendra Modi is India's Prime Minister, and Rhythm Desai is as bullish on India as ever and as fit as ever as he was 10 years back. And Rhythm joins us now ahead of his conference. Rhythm will, of course, get to hear more from your conference, but, we've had the verdict. Narendra Modi is back as Prime Minister. We have Modi 3.0 loading now. And you're writing in a report that the next decade is going to belong to India. There are a lot of skeptics who believe that this time, because it's not just the BJP government and there is alliance government, could there be some roadblocks? You don't think that's going to be the case?
Yeah, I don't think so. I think we got spoiled in 14-19, but India's template for since 1989 has been of coalition governments, and this will actually be a very stable coalition. So I see this government working through the next 5 years. I don't see any shift in policy. Macro stability will be the key focus, along with building the supply side. These are the two things that this government will do. And essentially the idea is, can we take India's potential growth rate from 7 to 8 without triggering any inflation side effects? And I think this template will be the way the government will work forward.
Okay, when you say coalitions have done well in India, do you take example from 98, 99, maybe even 90, 92?
We can assuage ourselves by taking all these examples, but every situation is fresh. Those who are skeptical have to be reminded that reforms have to be carried out with the will of the leader, and it is not a function of how the government is structured. Okay. I don't see any change in this Prime Minister's will to undertake structural reform.
In the last decade, you had written this report that this is India's 401k moment, and domestic money is going to drive the Indian market from here on, just like it did in US market multi-decades back. Now that's come true. Do you think that's going to continue, and why are FIs still not buying this market when there's so much visibility?
So I'll take the second one, right? There are only two cohorts in the market. There's a domestic investor and there is a foreign investor. Every single day, the domestic investor is putting money to work. So where's the space for the foreign investor to buy? Because in the market, you need one seller and one buyer. So I think the seller will emerge now, which is the corporate issuer. Okay. So corporates will start raising money, and that is how foreigners will get space to buy. So if you ask me for a prediction, which I'll make, I think in the next 6 months, foreign buying will return into India.
How much?
I don't have a number. It depends on the corporate issuance cycle.
Okay.
Actually. So I think corporate issuances will grow, and I see a robust primary issuance cycle because India's investment cycle also is picking up. So a lot of that funding will happen. So that I think is the second. On the first bit, I think we are still in early days. In the US, the household bid on US stocks lasted for just over 20 years. It started in 1980, ended with the Nasdaq bubble.
We started in 2020.
We started in 2015.
Okay. But most of the big money came post.
No, you have to start from 2015 because it goes like this only. It doesn't start from here.
So we can't choose the entry point.
Yeah.
Okay, got it.
So it started actually in 2015, late 2015, and now I think we are in the 8th year. This has a long way to go because unlike the US, our demographics are not turning down in 10 years. In the US, demographics started reversing in the start of the millennium, and the baby boomers started retiring and they started withdrawing. That's not happening in India for the next 15, 20, 30 years. So we could have a very long change. And one of the things that I'm saying is that it's possible that the government may allow retirement funds to put more money. They're currently capped at 15 on incremental flows. The experience has been very good. They are able to deliver returns to their savers. So why not take this number up? So that is also possible. That only will give a lift to this.
Okay. So with Modi 3.0, are you saying that it's going to go down the same path like Modi 1.0, Modi 2.0 in terms of fiscal consolidation, in terms of spending where it's needed, and in terms of not necessarily going towards the populism route?
I see an acceleration actually.
Okay.
Yeah, because COVID did derail some of the fiscal consolidation. I see India into a primary balance in 3 years, and India will be the only large country in the world with a primary balance. Primary balance is when you don't have excess of expenditure over revenue, so you are borrowing to pay interest costs. Technically, you are bankrupt if you're borrowing to pay interest costs. If a corporate has to borrow money to pay interest costs, that corporate is bankrupt. Governments do it because they can print their way out. Right? Our government will not have that deficit anymore. Wow. When that happens, government balance sheet will de-lever very rapidly, because we have nominal growth of 10-11%. And if the government is not borrowing to pay interest costs, you get a major lift to private sector. So crowding in of private debt to GDP and crowding in of private investments will happen. And on other areas like infrastructure build, like energy transition, like manufacturing, I think it will accelerate further. We have so much more road to travel on this. It's not the end. It's not like we have achieved everything we want to. We're still a poor country. We still have only $2,500 per capita income. We should be targeting a 5-digit number. And that can only happen if we lift investments.
Exactly. That's been your point for last, I think, many years now. I don't want to preempt your conference, but so I'm going to end it quickly. In terms of portfolio positioning then, what do you think you should be going with right now? Mainly domestic economy oriented stocks?
Yeah, absolutely. Domestic cyclicals. I think the private banks look good. The consumption stocks across the spectrum look good. And wherever there is any room for valuation, just, that should be a great area to be. I think industrials look good. You have to be a bit selective because the valuations may be elevated in some places. And yeah, I think as a contra bet, IT services, I think continues to look good.
All right, Rhythm, thank you so much. And of course, all the best for your conference. So we'll have a detailed conversation at that time. Thank you so much.
Thank you.
All right, well, that's Rhythm Desai. Interesting comments coming in from him with regards to the sort of setup for the market, which he thinks is going to be extremely constructive. Mitesh is with us with what he'd like you to do. There's about 8 minutes left to close. Nifty is down about 50 odd points. Finally, Mitesh, a bit of a pause, right, in the broader move. What do you make of the price action and your trades?
Yeah, Prashant, bit of a pause. I think much needed pause. So, we've had a good rally. I think some stability will be very welcome. Ultratech Cement, I think all the cement stocks are looking good. We had earlier a buy on ACC. I think Ultratech Cement could be a good VTST. Keep a stop below 10,740 and 11,000 could be the target area for the stock. And Ambuja as well, the VTST with a stop at 634 half for targets of 648.
Okay, all right. Thanks a lot for that, Mitesh. For the time being, we'll slip into a short break. Come back. We'll continue with some market talk on the other side. Welcome back. Well, the markets, they've slipped a little bit. We are moving to the low point of the day as we speak. But those cement stocks, they're actually on fire. You have Sagar Cement that's now up closer on 12%. It has valuation comfort. You have capacity in case it's going to be this big push on ground. So that stock, in fact, is now up closer on 12.5%. It's been a relative underperformer, actually. That's found its own. Just take a look at it. Big move is what we're seeing on that counter. Anand Tandon joins us on the show. Hi, Anand. Thanks a lot for joining in. I want your comment on these cement stocks. KCP, NCL, the Andhra and Telangana focused companies, they're doing very, very well. Anything you like over there? Ramco is the largest one who has, I think, 30% of the capacity in that vicinity.
Well, I'm not a great fan of cement. I think the capacities are such that it's not possible for any company to generate economic returns in a sensible way. So, it's not a sector that I would prefer. However, if you are looking at companies here, you've already mentioned the names of those which are going to be operating. Remember that Telangana is yesterday and Andhra is tomorrow. And the two are not the same state anymore, much like people like to think of it as one block. So I think the story is going to be that the construction levels in Andhra are likely to rise quite substantially. Companies based there may have some advantage in terms of the transportation cost. But beyond that, I don't think that there is much to be, joyous about.
Okay, all right. Taking that point, then, and that's the big hope, right? That the Amravati project that was spoken about by Mr. Naidu in his previous term comes back into focus. So we'll see how that goes. For the time being, you're not a fan of that. So we take that on board. I wanted your view on some of these mid-cap IT companies. For emphasis, you had a large trade that took place today. But now that free float will increase, so some funds will realign themselves. Any of these mid-cap IT companies, Forge, Emphasis, KPIT, all of them down 3 to around 4% today.
Yeah, so that's another sector where, the outlook remains clouded. While the companies have kind of said that the order books may pick up later on in the year, that typically means that they don't know when they will. The near-term outlook in the domestic market is, of course, nothing great. In the international markets too, whatever deals are happening through vendor consolidation, which means the run-of-the-mill IT services business is not particularly well positioned to be able to take care of being able to scale to bigger ticket items. And frankly, even in the vendor consolidation, I think there is a risk that companies in the US are actually outsourcing their manpower to you as the manpower demand decreases with the kind of surge that we are seeing in AI. So I think the best way to play the Indian market today is to remain with the domestic cyclicals, things like banks, companies which are based on agriculture, because from all reports, the monsoon does look like it's coming through fairly well. And that's been an area that has significantly underperformed rather than looking at international markets for the near term.
Do you own any of these consumer durable names, Anand?
So I usually don't like to talk about my own portfolio, but there is obviously, I have run a fairly diversified portfolio for myself. So I would have a smattering of various things. But bottom line is that the consumer durable, except for the fact that you had a very terrible summer, where obviously some of the AC companies and refrigerators may have done exceedingly well, and we will see that soon. By and large, the rest of them would grow along with the housing, and that's the driver that remains. So if you really want to play the sector in terms, a safer way would be to look at housing finance, or even a better way, because you have housing per se is a very localized market. Each small area is an area by itself. So I think if you are looking at a broader trend, I think housing finance is perhaps a fairly decent way to look at it.
Okay, all right. Anand, thanks a lot for joining in. Request you to stay by. Well, for the time being, let's start wrapping up on the markets. It was that sort of a day. We started off well in the green. We couldn't hold really in the green, though. What weighed in today's trading session? You had tech-related stocks. Tech Mahindra, Infosys, Wipro, LTI, Mindtree, the top losers on the Nifty in today's trading session. And the tech sector on the whole was lower in trade. What did well then? Domestic-facing names. Rural-focused companies like Hero MotoCorp, the two-wheeler maker, did quite well. Ultratech Cement, there's going to be a push in rural housing. That's the hope. That stock was up close to 3%. Grasim holds stake in Ultratech Cement, so that obviously gains as well. And select FMCG names did well. Nestle, case in point, that stock was up close to around 2%. What didn't do well from the broader markets? Well, global-facing themes. Vedanta, Coforge, Emphasis, KPIT Technologies, all of them were under some pressure. NMDC as well was down 1.5%. What did well? Domestic-facing themes yet again. Ramco Cement was up close to around 6%, booming away by the time we wound up. You had Samvardhana, Motherson as well, that was up close to around 5%. Shree Cement up close to around 4%. all of them did pretty well in today's trading session.
Well, yeah, absolutely. And, market breadth was positive, even as the Nifty sold off a little bit. But there's enough and so much action, actually, in the broader markets, which I think is going to keep one busy. So you look at FACT and RCF and NFL, the fertilizer names, Rallis India, all up 10%, 10, 12, 14% up today. Titagarh saw very, very large volumes today, and stocks about 1,300, 1,330 or so. It's still not back at the highs, which is, the 3rd of June highs. I think it had gotten to about 1450. So still about 120 rupees away from the recent highs. You had Karur Vysya Bank, which had a very large move, 7.5 on very large volumes today. Something like the Reliance Infrastructure came up. So the recent low last week was about 150 rupees. It's back at about 186. But of course, it remains a far cry from the highs of the year so far. New India Assurance is another name. General Insurer, government company, 8% higher, very large volumes in it. You had Jyoti CNC, which saw a 10% move today, 1167. Repco Home Finance, 9% higher, 540 on that one. Stovecraft was up 10%. Stovecraft, I think, is doing well. It started off 2024 in a good way. 23 was a kind of a washout. 22 was not good either, but 20% so far in 2024. EPAC was up about 11.5%. Stocks at about 196. EMS Limited was another one, 8% higher, 531. So really lots of stuff going around as far as broader markets are concerned. All in all, 50 points, 55 points lower is what you had. It's a wrap on this edition of Closing Bell. We'll take your leave. Thanks for watching. But don't go anywhere, because Markets Forward is coming right up after a quick commercial break.